And just like that, we're back for another XRP video. Ladies and gentlemen, we're talking XRP technical analysis. We're going to be reviewing what's been going on most recently with the price action and what I think is likely to happen next. Now, as I get into the video, if you do enjoy the content, smash that like button. I'd appreciate that. If you're new, subscribe. You can always unsubscribe later. And of course, join us down in Discord if you haven't done so already. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Let's jump right down into this one. So XRP paired up with USDT. We're using BitGet spot exchange for this one and the 1 hour time frame. And yeah, so here we can see we hit our expectations in the hours yesterday, or no, it's actually this day afternoon, about 5 p.m. UK time. We came down into our range. Now we were expecting, as per the previous video, 46.845 to 47.384. And prices come back down into there. Now, here's the unfortunate news. I think we've got to come back down, potentially even a little bit deeper here. We're not quite ready for this move upwards. I think we're getting close. I think our pump for XRP is close to occurring here. But I think we probably have to be testing a little bit deeper here. I'm not confident on the structure that's emerged, okay? So we've gone ahead and basically filled out a fair value gap that was left behind. We've kind of started to work our way back down again. Now, hopefully we hold the line a little bit here. So we're hoping to kind of hold within this box. I'm going to actually make this a little bit brighter, so a little bit yellow, right? So we're hoping to hold inside the box between 46.845 and 47.384. We're hoping to hold it, but we are, of course, doing the typical thing that I talk about, which doesn't give me the confidence in the market. Yeah, that would do. We can see right inside here, it's actually really badly drawn, but you can kind of see a higher high, higher low situation. And yeah, to me, this is it's not going to give me the confidence in thinking that we are going up to the moon, or we're having a pump of any kind. Ultimately, this overlapping corrective structure, taking us a little bit higher in the price chart, is being met by resistance. You can see that on the 50 EMA. You can see how we're being hit down by that red line. That's the 50 EMA on the 1 hour time frame. And we can see here that we're coming up into this red block. This is also an internal sell order block. So I think we're probably going to correct down. I would like to find support though, probably in and around these low ranges. It's a tad too high there. So I think we'll go 47.439 to 47.614. That's going to hopefully be the range of support. If we can do that, maybe we can just test inside this box a little bit if we needed to, but bounce upwards. I think ultimately we're not quite getting the traction we need right away, but I think we're probably going to be able to break the 50 EMA maybe later today. But we do need to get past equilibrium. That's going to be the big problem within our price chart here. So for the most part, we hit our expectations. I still think we're going to come down and test again. And then I think we have a chance of pushing up towards equilibrium. Getting past equilibrium on attempt 1, I think will fail. We'll probably get rejected here initially. And we'll end up looking at a pattern that might be more corrective like this. Something to this effect. Maybe it'll be the 200 EMA. Then from here, we'll probably correct down, coming back into these ranges, and then finally break through it. Okay, like this. Okay, this will then essentially allow us to look at this entire structure as a big WXY, for example, get us above equilibrium, and all of that I think will then fall in line as a single wave on a larger time frame as we kind of push up towards our higher range targets, right? So for the most part, that's pretty interesting. I think we're getting somewhere, but we're not there yet. Now, down here on the low side, we saw this fair value gap that was created. It got captured right away, so not a problem with that one. There is a little one here that's kind of been left behind. Again, 𝗕𝗘𝗪𝗔𝗥𝗘 doesn't always draw them on, and this is another example of one that got missed right up here, coming in at 48.747 and 48.851, and again, my expectations are that we're going to grab that fair value gap. Now, down here on the low side, we still have a fair value gap that hasn't been hit, and we do have a theoretical B wave that could come down deeper, and this one's coming in at 45 to 46 cent. Now, the fair value gap though is 46.5 to 46.8, and so it wouldn't be too difficult for us to come down a little bit deeper, but for us to do that, we kind of have to bounce up towards this equilibrium, in my opinion, right? So we've come down in a big move here. we then bounce up towards our fair value gap equilibrium range, and then we come down and grab that fair value gap down at the bottom there. That's still also a possibility that we need to be mindful of. It doesn't change our short-term view. It only really kind of stops or kind of delays our longer-term view, right? So essentially what I'm thinking is going to go on here is we're likely to see some kind of pull to the downside, maybe tap into our existing box that we hit at 46.845, 47.384, right? Tap into it maybe, and then move up towards our fair value gap. That there in itself could be a B wave movement of this C wave, then takes us down deeper, gets that fair value gap grabbed. Maybe even we tap into our minimum expectations here at 46 cent on our B wave, and then we can start that bigger pump to the upside. So all in all, right, because I'm on the hourly time frame, this isn't something that's going to take forever to play out. I imagine that considering we are Tuesday, by the end of the week we should be in a really strong position, either already in the move to the upside or finishing the move to the downside. It'll be interesting to kind of see how that one plays out, but for the most part, the structures, tracking the psychology of the current participants, that's kind of where that one sits. Now, for those who maybe are new, who are unfamiliar with what fair value gaps are, we'll just jump over into 𝗕𝗘𝗪 here, which obviously is the data source for the chart that you were just looking at. If we come over to the trade area and we go to spot trading and we go to XRP, because you can buy XRP on spot on 𝗕𝗘𝗪, which is fantastic. So if you are looking for a new exchange, why not check out 𝗕𝗘𝗪? Affiliate link is in the description below. Here you can see that you have trading view. It's already here. All the analysis that we've drawn previously is already on here. It stays, so that's good. But fair value gaps, as you can kind of see, we have one higher in the price chart. We have a couple of low ones in the price charts as well. They are created from imbalances in the order books. For those who do not know, essentially, if you have large buy orders and they're not being met by equal amounts of sell orders, then typically what you're going to find is a gap that gets created where basically price wants to move to where the sellers are to fulfill those buy orders, and vice versa. Large sell orders, price will move down to find the buyers, and so forth, right? And as such, you leave behind gaps in price. This price gap or fair value gap that gets left behind on the price chart represents an area of price movement where the market was illiquid. Okay, and it's really important that we understand what liquidity is specifically for XRP, because ODL and all that good stuff, right? So liquidity is an area, or is basically, if a market is liquid, something is easy to buy and sell. No price movement would occur. You just go sideways, right? In a highly liquid market, volatility is minimal, okay? Meaning that you can buy and sell without disrupting price. And so bid and sell prices, they are incredibly tight together, right? That's a highly liquid market. Now, in an illiquid market, the opposite is true. Basically, it has very few buyers and very few sellers, and really hard to sell a unit. I apologize for the sneeze. If I forget to cut that out, you can all have a laugh at me in the comment section below. I probably will forget to edit that out, so I apologize. So yeah, for the most part, right, you can see that when market is illiquid, it's really difficult to buy and sell things. The price moves rapidly. It creates this these spikes, this volatility, right? So for a market to be highly liquid and for things like ODL to work, you don't want price to be volatile, right? You need active buyers and sellers, and you need a stable price, right? So in a liquid market, price is stable. And when it's illiquid, you get these spikes, and as such, these spikes create gaps where basically liquidity just didn't exist, right? Or very little liquidity existed. And well, what's the importance of this? Well, the importance of this is that price likes to go back to and go ahead and put liquidity where liquidity wasn't. And so price likes to go back and fill those gaps, essentially, right? In the same way that you see with CME gaps and things like that. So price likes to go back and put liquidity back into those boxes. So when we see XRP's price chart, and we can see that we have these fair value gaps on the chart, well, price wants to go down and wants to go and fill them out. Okay, it can take a long time to play out. It can sometimes not take half the time at all. Really difficult to kind of get that route going. Now, ultimately, we've been in a ranging market for quite some time. We can review this because we can see that we were bullish. Oh, actually, we were bearish. We were bullish. We were bearish, we were bullish, we were bearish, we were bullish, we were bearish, right? So we're currently in a bearish state of play. And ultimately, you know, the market's just been kind of ranging sideways on a bigger scale. Like if you take a look at it on a daily time frame here, really what's going on over this entire time period, very, very little. We had moves up, we had moves down, we had moves back up again. I completely lucked out, obviously, as many of you guys know, by having a random buy order set at 30 cent that got filled on Binance way back over here. And we wicked down on Binance's data on January the 2nd, and I was able to actually get that low. That just doesn't happen for me very often, so I lucked out on that one. Chris often says, you know, why not put a bid somewhere where you just think, you know, if it goes down there and it wicks down, you can grab that, and that's exactly what happened. So as a case in point, I guess you should do those kind of things. Of course, you know, I'm not a financial advisor, I can't give you financial advice, just I lucked out on that one, amazingly so. And of course, you know, you can see in here, we still have those expectations on this pump to the upside, 79.91 to 93.76. Our structure here is looking to finish off a B wave movement, as we were talking about, maybe testing on that 200 EMA coming in at 45.48, which again would be, you know, coming down quite deep. I don't think we're going to go all the way to that 200 EMA. And of course, you know, our first target range is 62 to 67 cent. So essentially what we're looking for here is a W, some kind of correction after that, then up into that Y wave, hitting in those highs, right? So as you can kind of see, if we zoom out of this, we have a structured point here now that allow us to kind of look at this market as a way of potentially moving upwards. And again, you know, we can take a look at, you know, what that might mean as well on a slightly bigger scale. So all in all, everything's kind of moving along quite nicely. In fact, I might put that one back. I might as well keep that. And everything's kind of moving along quite nicely. There isn't terribly too much more to this. It's quite a straightforward one in my mind anyway. We do see ourselves coming down into the you know, lower highs and lower lows. And these, of course, do have a tendency to want to break upwards. So everything's looking like it's coming together quite nicely for XRP here, and of course all of this sits outside of the lawsuit and everything that's going on with the SEC versus Ripple. So I think there's a bit of a bright future for XRP. A lot of accumulation is holding well. And I think, all in all, I think it's going to see some pretty interesting green days in the coming weeks. But let me know what your thoughts and opinions are in the comments below. I'm going to leave this one right there. If you have found it useful, smash the like button. If you're new, subscribe. And if you haven't joined us in Discord, check it out. And if you're looking for a new exchange that sells XRP on spot, check out 𝗕𝗘𝗪. Affiliate link is in the description below. Until the next one, though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.